Good day all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Thursday, the 7th of November, 2019, just after 3 p.m. Central Daylight Time. Tomorrow's the big grain report. I think it's 11 in the morning Central Time, and what you want to be looking at is the yields. I'm not that worried about supplies up or down. I want to look at the yields on beans and corn and get an idea as to what the crop sizes look like. Now, today's news, as you know, was a breakthrough in part of the idea that tariffs could come off in stages agreed to by the U.S. and China. Now, at first, China was saying, no, they all got to come off to get phase one done. They backed off on that. Now they have to negotiate just where they're at and taking these phases off. The stock market went up big on that, pulled back. You broke the heck out of the metal markets on it, and copper got a run. But beans up 9 cents, I don't know. Just it looked to me like a market that's on fire because of that tariff talk. And the other part that I look at is what the hogs do, and they weren't up dramatic either. So we'll take a look. We did get up moves in them, and that's good. Don't get me wrong. So now let's see where we're at. On a weekly area chart of closes, you're up 3/4 of a cent for the week so far. Tomorrow's the last day. Tomorrow will determine up or down is my guess. And I think it's all going to be based on the supply-demand report and yields, looking at those especially. When I take a look at a daily bar chart of Jan beans, you can see how the market's been coming down into this range, and today you had a big reversal. Now, at first, when I was writing my market letter, I was disappointed. Beans were not up very much. And I said, what is it going to take to get them going? I'm still not impressed. And why? Here's why. I don't have a pattern. I've got an outside day up, I understand that. I have the pattern of higher lows, higher highs. I can argue that that's bullish unless today's low is taken out. There's the first part that's good. The part that's not good is that the market hasn't been able to get over that 18-day average to add to any gain to it. So I see resistance right here, which makes sense. This is the zone of it. The market's going to wait for that 11 o'clock report, and after that, the algos would take over, and away you go. That's typically what I'd expect to see out of it. And if you look at the Bollinger Bands, this held it on the break here, and you just missed hitting that lower band by 1 penny today. Penny and a quarter. So now the question is, does this hold up? Let's assume it doesn't. And let's assume the market goes through this low. Because the Bollinger Band's right there, I'm going to look for some interim support. If the market fails there, then I think the 913 3/4 area is in play. Let's go the other way and say that the yields come out bullish. Well, if the market goes over 942 1/4, wherever that upper Bollinger Band falls to, and it will fall tonight, that'll be the number that I look at. When I look at the slow stochastic with the market, oversold. So in summation, we have the swing line up. The bias is down since you're under the 18-day average in an oversold condition going into a major report. Why be bothered? When I look at the meal market, what the market did is yesterday, the market hit the lower Bollinger Band. And you know what I tell you, the first time you hit it, especially after hitting an 18-day average, it's like a pinball machine, you reset. That's where I think the pros take some money off the table. Today the market rallied back up to the 18 and the 100-day average, settled literally at 305.60 in between the two, 304.80 to 305.80. The last high in the market was 305, what was that, 305.60, I believe that was. Can't even read myself, 306.60, and today's high was 306.20. So do we have a trend? No. You've still got the higher high, lower low pattern in the market. In the oil, because beans and meal gained, I think the crush spread took something back from the soybean oil. You're overbought. Market's starting to correct a little bit of that overbought condition. You're down 30 points, and you had hit the upper Bollinger Band these 2 days, and you've backed away. So I think the pros have stepped away from this market. I don't see a trend. I see a lower low and a higher high. Then we get to the corn market, which today went down to and settled literally just under the Bollinger Band at 375 1/4. That lower band's 377 1/4. Bearish condition, trying to break out of sideways action to the downside. So we were looking in the office today and saying, what could next year's crops go down to if things get really bad? And we were looking at the July, and we were saying to ourselves, because we had a meeting on it bright and early, you know, if the report was really not a good report, could you get another 30, 40 cents? Don't know. But I'm looking at the market here that in order to negate the downtrend, you've got to get back over yesterday's high to break the swing line, 385. You're oversold, trying to break out to the downside going into tomorrow's report. In the wheat market, back and forth action against this 18-day average of closes. Now, if you don't pay attention to that and didn't see it on the screen, you wouldn't know that that's been what I call that line in the sand, that it's trying to make up its mind what to do from there. At this point, momentum is flat. The bias, because you close 512.5, is down, and the swing line is up. Need I say that the grain markets are looking for direction from something? In the sugar market, you got down and just missed taking out 1234. The trend still remains to the upside, but as I tried to explain to you, the seasonals are down here. So I think that the pros, when you hit the upper Bollinger Band and the 100-day average, regardless of seasonals, I think they stepped out of the market there. Now the question is they're trying to defend in some degree that 18-day average. If you take out 1234, you lose the uptrend. So they have to protect their positions if they're bullish right now. I see divergence. I see momentum turning down. I see the bias down, the swing line up. March coffee. So I'm leaving Dees, going to the March now. And as you can see, just like the Dees, you've been on a tear to the upside. You close over, you close under the Bollinger Band, but you're riding it with an embedded reading. That's the strongest signal that we have. Until it's done riding it, it's not. What else do you see? 1, 2, 3, 4, 5, 6 business days without making a lower low. So the people that were short in this level here, they're nailed. That's the word that I like to use, and away you're going. The trend has been up from way back here. You got through the 100-day in the upper Bollinger Band. I think the pros came out of some of their positions here, and then you caught the embedded reading and you've been running. In the cocoa market, I've moved to the March cocoa. So Dees is done as far as I'm concerned. The market here has got a trend. It's got a downtrend. Lower highs, lower lows. Similar to the December, you're fighting a battle at that lower Bollinger Band, but this is a cleaner chart. I don't know why, but it's fitting together better. If the market breaks from here, look for the 100-day average. It's the first time under that lower Bollinger Band in a market that is now oversold. Any reading under 30 I consider oversold. So to get a bounce wouldn't surprise me, but for the bears to be knocked out, you've got to take out, as I see it, 25.25. The fact that it's oversold, I don't know that you're going to get selling on the new selling on breaks. In the cotton market, I've moved to the March cotton now, and I see a pattern of a lower low, a higher high in a narrowing Bollinger Band. Market's waiting for a direction. It doesn't have one right here. Fed cattle, still very bullish. Look at the length of this embedded reading, and look at how the market has ridden itself up. Still bullish. When you lose the reading, I won't be as bullish. It's that simple. This rules the day. When I come to the feeder cattle, same thing. You rescued the market today. I don't know that this was going to rescue itself or not. The traders that get my twice daily written updates, they know what I'm talking about. But the pattern is still one of a bull market. And the market today came to some key numbers right here. The next number is going to be 147.30s. Can the market hold on to the embedded reading? Why not? So I see the market is still being bullish. And in Feb hogs, I've moved away from the Dees to Feb now. You can see how the market's got the pattern of higher lows, higher highs. However, you're still under the 18-day average, so the bias is down. The battleground seems to be the 100-day average, not the 18 initially. That's just another level of resistance above it. And you have a market that's oversold. I was disappointed to see 100 points higher when the pre-market in the Dees, and I'm talking when I was doing my updates this morning, which I think I was looking at the quotes at 5:30 in the morning. And the pre-quotes started going the limit bid fairly fast. Market never did that. So you get these synthetic bids when a market's not open. You get ideas, but I was wondering. I call this disappointing day in the market. Talking about my morning subscriber video, or in fact, all my research. If you take a look, what I try to do is at 5:30 in the morning, 5:45, I'm already ready to record my first video. The idea here is to help you to help yourself. What are you seeing in the charts that maybe I pick up that you don't? What are you looking for in ideas? Maybe I see something that you want to see. Whatever it is, I'm trying to fill that void the first thing in the morning before the trading day gets going. And these videos, they cover 40 charts, 5 ETFs. They look just like the one you saw there. It's full of fundamental, technical analysis with specific buy, sell, exit points. Now, let me tell you something. Not every day is there something to trade. In fact, I consider my job as much of telling you what not to do as to what to do. And I cover it in all these markets in this sequence that you see. There'll be a slide bar that you can move to get to the section you want. Also, all those names are listed on the side. Just click one, it takes you right to that section of the video. 26.5 cents a day to get you started. If you think it might be worth it, why not go to our website under the word research. You'll see Ira's subscriber video, and you can read about the rest of our research there as well. Again, www.iraepstein.com. You can click up here to get there as well. I'm Ira. You have a good trading day, and I'll see you in the morning.